Hello and welcome to Pro Trader Strategies Market Commentary for Monday, June the 17th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman, yes, from CNBC, Fox Business. I'm here to teach you guys some different option strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. And with that out of the way, let's get it on with some economic data across the pond. It being a Monday, we don't get a whole lot of economic data, but we do have Draghi speaking right now, actually, probably pretty close to right now, a couple hours maybe, actually, because this is Eastern. And then that's about it. Just that guy talking, Draghi, which is pretty important. You know, he is the ECB president, so he will be talking about the economy and how European region is doing. Not that we don't already know through the economic data we've seen that they're starting to see some slowing down going on there. So that's probably going to be one of the things that they talk about, and the monetary policy that's going to be surrounding that type of move. Anyway, on to the overall markets. We've got a pretty quiet day ahead of us. But a lot to talk about. Having said that, let's talk about crude oil. It's right there at $52.30, right at the point of control we're trading around. That is going to act as that magnet we've talked about, where the market's going to want to settle down here. And I think that this is a good place for oil. You know, of course, I'd like to see oil lower because that helps the economy. That creates more spending elsewhere rather than just in our gas tanks. So this will help the economy. You know, there's a lot of people going to be defending this $50 a barrel area because they want to keep it above that. And that's good for U.S. oil operations. Anything below 50, these guys start struggling at making money on the fracking. So we want to keep that just above so that we can frack away and have that surplus of oil, that therefore allowing the gas pump prices to go down, right? That's where we all see it. That's all where we're all going to feel it. So we'd like to see it a little bit lower to help us out as far as I'm concerned. All right, gold making a crazy little move here today. As you can see, it's a little bit unnerving and in a sense, where we're seeing this up here. That looks like a continuation pattern to me that gold is going to want to try and cruise higher again. You know, we've already got this little paradigm switch where we had the point of control for the time get moved up a little bit higher. We're still waiting on some of the the volume to kind of pick up around this area, but we can see that the new point of control is 1280. So that whole area down here that we were talking about that we might revisit, I think is out of the way, or out of the realm right now. So 1280 is where the magnet is, but I think that this is not going to happen right now. I think that the market is wanting to move higher in gold, and we might just see that. A lot of this stuff having to do with the precious metals not coming out of China. Their people are rioting in the streets, so the economy is not doing too well over there in China, despite the fact of what the government says. You never can really rely on what the government's saying over in China. All right, we've got bonds moving higher. Funny thing, I saw somebody tweet out a poll on Twitter asking whether or not they think the Fed is going to cut rates in 2019 and or how many times. I said 0, and it ended up being that was one of the more popular answers for that. I think it was over 50% of people said they were not going to cut. And we've talked about this level here at 155 is a psychological level as well. You know, we talked about this number right here, the 154.22, which is right where we are right now, 154.22 trading. That is where we have our Fibonacci resistance. But this number right here, the 155, is the one that I think we really need to keep an eye on, because that's where we start seeing a lot of selling pressure in the bonds, is at 155, because that's really where it starts looking like people are asking for way too much in Fed cuts, especially way down the road, that we're going to be in a bad economy for that much longer. So I think that 155 is going to trump out this 154.22 area, which is right where we're at. Yes, it is finding resistance there, but I think that it's because it's slowing on its momentum ahead of that 155 area. All right, VIX is starting to spike despite the fact that we are seeing the Dow Jones in positive territory. It's a bit of a mixed bag at any given time when you're looking at the charts, whether or not one equity is in positive territory or the other is not. But we can see right here, we've got the time nodes starting to move a little bit higher across the board. So we've got a lot of time being spent up here in and around that 155, at the 25,853 area. That is going to be acting as a support and resistance, or acting as a magnet, I should say. That's our little magnet right there because it's the point of control. That's going to be wanting to pull it down. And you can see once we get close to these value area highs, we lose a little momentum. And we've gotten a lot of momentum moving higher. We've gotten part of the point of controls to move higher, and waiting for some volume to pick up in and around that. We'll get the rest of the shift in the markets there. And we're going to see that happening pretty consistently, other than, of course, the NASDAQ when I'm getting ready to say that. But NASDAQ in positive territory as well, moving away from its point of control here. And it's not as clear as to it wanting to settle down. I think it's close enough to the point of control here that we're going to start settling down in and around this area here. I think that we'll see some market moving back and forth based on the economic data we get. But for the most part, I don't think that there's enough good economic data to really get us to rally, unless, of course, overnight we get this tariff thing where we work out a deal with China. But before that, I don't know that we're going to see that. E-mini S&Ps, we saw the shift in the time node moving higher. You can see we were talking about the 2800 right here. Now it has moved up very close to that 2900 area. So now 100 points higher, we're going to be starting to see that magnet happening. So what's important about this right now is volume or price is being accepted at these levels. That is very important. When you start seeing these shifts higher, that means price is being accepted there. That means it's not as scary of a situation for some people that are trading. Remember, we talk about when it's overextended to one side or the other, people want to get in and out of those trades because of these emotional ties we have to money. Whether it's, I'm up a lot of money or I'm down a lot of money, is where those emotional things start affecting trading. And we can see that happening. But when we see this move higher, that means price is being accepted at those levels. We're going to see less movement when we start getting those extremes, and price being accepted higher. This is all falling into that whole theory that I was talking about, that we're going to get these two like this and build in this little area right here for the volume. So we're going to see volume and time build into this and create a bigger bell curve in and around that area, is what I see this happening. It's starting to follow through with what I've been talking about. We've had this market start to settle down in and around this area. We've got the shift higher. That is all bullish information going forward. So keep your eyes out for that. I would say the risk is more to the upside than it is to the downside right now. All right, E-mini S&Ps really getting this wound up. We talk about this being like the rubber band on the old school helicopter or old school airplanes. If you know what I'm talking about, you get those airplanes where you wind up that rubber band that is attached to the airplane, and sooner or later that rubber band kind of looks like that, where it's really wound up, and then you'll get it where it's really wound up tight, even tighter and tighter. And the longer that this whole thing happens, that's like that rubber band winding up around that propeller. And the more you wind it up, the more energy that's released when you let go of that, and will snap in one direction or the other. We don't know if it's going to be a move to the downside or if we or to the upside. We just know that a big breakout is going to happen the more that this starts winding up and tightening up our ranges. As you can see, we can see that these ranges back here are much bigger than what we're seeing here. We're really starting to see these tight little ranges, which is a little bit more of that built up energy for lack of anything else I can think of. All right, let's talk about some more trades that I've been looking at. All right, we got Apple in here, and I did this in the June. I sold the 165 puts in there for 89 cents originally. I'm trying to get out right around for 50% of my max profit on this trade. So those are, like I said, the June 165 puts that I sold, and I sold those for 89 cents. I'm right now trying to get out for 40, which is slightly below where it's currently trading. So that's where I'm trying to get out, right around 40 cents for this trade today. I've got a working order. I think it's, last on this trade was somewhere around 47 or something like that. So I need about $1 move higher in Apple to be filled today. All right, so I need an extra $1 move. So if I'm trading at 150 or 195.17, I should be filled on those trades to get out. All right, so that's what I'm looking at for Apple. And then I did add a trade to my portfolio, which was with Qualcomm, just adding a little bit to this. We've seen this big gap here. A lot of people probably are looking at me like, hey, this gap needs to be covered. Yes, it may. I'm looking at my strike location being slightly higher than that, and I went and started looking at the 77.5 calls in there. And I went into the July because it's a little bit further away. So I did the July, sold the 77.5 calls in there for 48 cents. So those were the July 77.5 calls. I sold those for 48 cents. And trying to get a move to the downside, or at least have some of this volatility come out of it. I don't think that we're going to see that market, now that we're back within this value area here, I don't think that we're going to be able to see a breakout to cover that gap before we come down and at least test maybe this point of control here. So I think that Qualcomm's looking to roll over a little bit. I think that a move higher is much more of a heavy lift than what Qualcomm has behind it right now, and or the market to be able to drive that stock that much higher with everything that's going on in and around the equities right now. So played this one, did the downside on there. And that's all I've done today. Added Qualcomm, looking to get out of Apple, staying in my GDXJ and TLT. I think that the market is following my assumption right now at this point, and settling down without volatility right now is making it difficult. Yes, it's following my assumption, but I was hoping we'd see some elevated volatility before we got to that point, and it's looking like that volatility has seeped out of these already. So looking for some other things to do here, because I don't want to buy premium selling or buy premium options like buy calls, buy puts, when I think the market's going to sit here, because that theta decay will just hurt me. I need to wait for us to look like we're making a bigger move before I start doing that kind of stuff. And that's about it. I hope everybody had a great weekend checking out my webinars. We are coming up with an assumption in the market, and then how do we find the right strategy for that specific assumption? That's the process we usually go through. I'm going to set these webinars up for you so that when we're going through these thought processes, how we come up with the right strategy for that assumption and that particular underlying. So check those out at Pro Trader Strategies. Also check us out on Facebook. That's where a lot of these daily market commentaries are going. You'll be able to get first access to those if you like our page, and you'll be able to see these relatively quickly. All right, that's all I got. Other than, if you can't take that, take it easy.